Today I want to share with you my day trading strategy for the Tokyo session. So in the Asian session, I'll show you how a day trading session, my favorite strategy, works really well. And there's been a lot of requests to show that strategy here on YouTube. So let's dive right in. There's a couple of things I want to cover here before I go into the strategy and the rules for it. I want to show you how that works out. So we'll type out the timing, the time frame, and the pairs for this particular strategy. So a few things you got to think about is number one, the timing is going to be for the Tokyo session, but 7 p.m. Eastern time if you're in Asia, it's going to be 8 a.m. Tokyo, or roughly 7 a.m. here in Bangkok. So just keep that in mind. This is going to be the Tokyo session only. This strategy works in other markets, but much better in the Tokyo session, the Asian session. Now, time frame, because it's going to be day trading, you can focus on either the 15-minute or the 5-minute chart. Both works. I prefer myself the 5-minute. The examples I'll show you here on this video are going to be all on the 5-minute chart. But you can use any time frame you want here. It's possible. As long as it's day trading, so a intraday time frame. Now, when it comes to the pairs, any pair with JPY, it's going to work quite well because it's the, of course, Tokyo session. So the Japanese pairs work well. The pairs with AUD, so Australian dollars, will work well too because the Australia is in the day also. So my favorite pairs are going to be USD JPY as well as AUD JPY. Probably my favorite, this one. I'll show you more example on this one, of course. Or you could even also go with Euro JPY if you prefer. Okay, these pairs will work quite well for this session. All the pair with the Japanese yen work well for this. So now we know the basics. We know the session starts at 7 p.m. I'll show you how that works out. We know the pairs. I'll focus mostly on this one here today, AUD JPY, and I'll show you more examples in the 5-minute chart because that's my favorite one. So let's dive on the chart and show you how that all works out. Okay, so the first thing you're gonna want to do on this strategy is go on a 5-minute chart. So I'm just gonna open this here, go on the 5-minute chart. And how this works out is it's very simple. You need to identify the range from roughly 2 hours before the session starts. So what you'll do is you'll go on your chart. You don't have to be there 2 hours before the session. So 2 hours before 7 p.m. You can be there if you want at like maybe 20 minutes before, 15 minutes before, that's fine. So you come back from work, let's say, because you work in the daytime in the US or in the Eastern time zone. You come back from work, look at your chart a little bit, look at the range in the market. We only want to trade this strategy in the range. We don't want to trade this any other time. If it's trending, we don't want to trade that strategy for the Asian session. We want to skip it or look at other pairs. So we need to have a clear range. So what I'll do is on my chart here, I have a indicator that's very basic. You can search for this one as CM Forex session highlight, which is going to highlight the Asian session. So you can just check it here. I want to see only the Asia Open, which is the Tokyo session here in this example. I'll put this on my chart. And what you'll see is that we'll see the openings of the Asian session. So here is the opening. Here is the other opening the day before. Here's the other opening, so you get the point, right? So what we want to have is a clear range like this one over here, or like the other ones beyond that. Okay, so what we'll do is let's take a random example. Here we're just a couple minutes before the Tokyo session opening. Now what we want to do here is identify the range in the market for the past roughly 2 hours before the start. So 5 p.m. to 7 p.m. Eastern time, roughly. It could be more or less, it could be a little bit different, that's fine. But you want to make sure you have a clear range in the market that you can look at and identify. So here in this example, what we have is a range that's going like this. So I'm just going to put a drawing here. So you'll see we have our low over here. We come back here at the same low. And we can have our high over here. So almost extreme high is around there. So we'll just put a line over here. Now, put any line you want, that's fine, doesn't matter. So here we have, this is more than 2 hours before, because this is at, in my time zone here, 2 a.m. roughly. And then we go all the way to here, so 5 a.m. for my time. Now you don't have to be there the whole time, you can just be there like 15 minutes before the session starts. Look at your chart, look at where the price is, if it's in the range or not, and look at this kind of range here. So now we'll just move forward a little bit here. Okay, so see how when the session starts, we are right here. Session starts here, 7 p.m. Eastern time, 8 a.m. Tokyo, or 7 a.m. here my time in Bangkok, in Thailand. So now what we want to have is we want to have a range and we want to have a break of the range. So a breakout trade. We're going to probably here trade breakout, but we need to be very careful about fake outs, which I'll show you how we avoid very quickly, very easily. So let's wait for a breakout of the range. What we want to have as a breakout, what we want to have is a candlestick breaking and closing beyond the range. So it has to close beyond the range. We don't want to have only a wick. We want to have a clear break beyond the wick we had before. Okay, so the wick we had before was here. We want to have a break of this one, or a break of this one actually. So both examples are going to be fine. So let's just move forward a little bit. So you see what price is coming back near the low of the range. Here we have maybe a break, but it's actually only a wick. So we'll cancel that. That's not a breakout. So forget that part. Here we have, okay, we're going back lower. Now we have a wick here we have to break on. If you work this low here, we have a breakout and we actually close beyond it. So price is, okay, this is really a clear breakout. See how we really break the lows. This is clear, there's no doubts about it. Okay, we are actually really breaking the low here. We're closing beyond the range. So how the strategy works is very simple. We don't want to enter only straight in the breakout. This session here, the Tokyo session, is well renowned for its false breakout. Okay, we're going to have a lot of them in the Tokyo session, so be careful. How we want to enter the market is actually very simple. We want to wait for a candlestick that doesn't make a new low. So what we'll see is here we make a new low, that's over here. We want to wait for the next candlestick that doesn't make a new low. And then you want to enter beyond the low over here. So we'll let price go a little bit in our favor if it has to. We'll let price go down and down and down, make new lows. But as soon as you have a candlestick that doesn't make a new low, kind of like a small pullback, then we'll put a entry order beyond the low. Okay. So what that would look like is, let's say you have a candlestick over here like this. And then let's say you have your range over here. And this one here goes below. So we get here. Okay. So this is a bearish candlestick, of course. We go below the range. And then this one here goes even lower over here. Okay, now we have a breakout, that's just really clear, but if we enter here, it might be start out on a false breakout. So what we want to wait for is a candlestick that doesn't make a new low. So let's say this one is a bullish here, comes over here, stays within this one, doesn't make a new low at all. We are still like above the low we had over here. Now we will put our entry order right here below the low, okay? Now we have a rule that if price is to go back within the range, we'll actually cancel the order. We're not going to trade that. But if price continues and now goes from here to here, and actually triggers our entry, then we'll take the trade. Or if price goes a little bit here, consolidates a little bit, takes some time off, goes down to our low after, we'll still enter the trade. We don't want the price to go back within the range at all. Then we'll skip the trade. So that's how this works. If price goes here, we are in our trade, and we'll put a stop loss just over the candlestick here that broke out the range. So this one over here. So you can put your stop loss at the top of the range if you want. I don't recommend it. Or just put it beyond the candlestick that broke out here the range. So quite simple, right? Then we'll have a take profit at, I would prefer for myself 1-to-1 and 3-to-1, but I'll let you choose whatever you prefer. You can do 2-to-1, you can do 3-to-1, you can do the next zone, you can do the same height of the range. Many ways you can take profit, but myself, for me, it's 1-to-1, 3-to-1. So that's how it works. So let's just get back on our charts here. So how are we gonna take the trade here? So we'll wait for the candlestick that doesn't make a new low. So let's see what we have over here. We have this one. So this one here doesn't make a new low. You see, it's the candlestick that has a low over here. Okay, so we are within the low we had before. So what we'll do is very simple. We will put our entry order just below the low over here, below our most recent low. So here, entry will be over here. Our stop loss will be the candlestick that break out from the range. So we can do this one here. See how this one is the one that broke out the range. Oh yeah, we could do this one here. That's fine too. That's fair. Or we could do the top of the range if we want to be very careful. But in general, this one here is going to be just fine. Okay, so quite a big stop loss here for this move because we had a big candlestick, but that will still work out really well. You'll see. Now let's see how the price moves and let's see if our trade is triggered. Okay, triggered right here, next candlestick. We break the lower low we had before. That's perfect after a small retrace here. Very good. Perfect example here. Textbook example of this particular strategy here in this market. So that's awesome. That's very good. Okay, so now we are entering a trade. What it will look like is you have a short position. We enter right here. A stop loss right over here beyond this candlestick that broke out. And now we'll do a 1-to-1 and a 3-to-1 target. So 3-to-1 would be, it's quite far, that's pretty good. 3-to-1 would be somewhere here, a little bit lower. Okay, 3-to-1 is here. And then our 1-to-1 will be somewhere in between. So I'm just gonna draw it by my eyes, not calculate it very carefully, but it will be somewhere around here. Or 1-to-1 and then 3-to-1 here. Let's see how this plays out. So, oh, perfect. Very good candlestick here. We broke out. This is gonna be like all in 5 minutes each. So it's very quickly. You'll see if you win or lose very quickly on the strategy. So that's pretty good. Our first take profit is triggered. Pretty good. We're getting the trade. Now we're going to move anything here. We don't move our take profit. We don't move our stop loss. We leave it all perfect as it was before. Okay. Next. Good. We are in a trade. Perfect. Keeping going. That's good. And a small pullback. That's fine. That's good. Still in a trade. And here we have our trade close at 3-to-1. Okay. So quite a good example here of the strategy. Works quite well. Now what you need to have in this particular strategy that's very essential is a clear range. If it's messy, if it's trending, you don't want to trade that. You need to have a clear range within the last 2 hours before the open of the session. So the session here opens at 6 a.m. for me actually, and 2 hours before that will be 4 a.m. So roughly around this. Now we have our range here. That's very clear. It's quite good. Okay, so this is perfect here on the 5-minute chart. That's awesome. Perfect example here. But let's look at another example. Let's actually take a more recent one. Okay, here's a recent example. This was on August 5th, so only a few days ago. And you'll see that here we have a slightly tricky example. So the range has to be 2 hours before the session starts, but you'll see sometimes the breakout happens a bit faster than this. Okay, so just be aware of that things could change, things could be different a little bit. So you might see the breakout just a bit before. So make sure you get to your chart at least 15 minutes before the session starts, just to be certain you'll catch the breakout, because it can happen quite fast. Okay, sometimes it happens a bit before, sometimes it's a long time after, but make sure you're there at least 15 minutes before the session starts. So here we have our clear range. You see from, this is even like 4 hours before, 2 a.m. my time to 6 a.m. my time here. We have a very nice range. Okay, top here, 2 touches, 3 touches on the resistance, then 1, 2, 3 touches on the support again. Very nice. But here we can already get in the trade, okay, quite fast. Now here we have a wick that breaks out. I wouldn't get in on this trade. That's a bit more tricky. I would want to see a good candlestick like this breaking out here. And I would put my stop loss right here, beyond the candlestick it broke out. It could be this one over here. This one we didn't break out because we have our low here, or wick. We are not closing beyond this low. This one here really closed beyond the low of our breakout, so that's really good. So I'm just going to be safe. I'll put it over here, my stop loss, and then I'll do my entry. We need to have a candlestick that doesn't make a new low. So here we have a low, here we have a new low. See how the wick here goes a little bit lower. So let's play this, wait for a candlestick that doesn't make a new low. Okay, that one doesn't make a new low, that's very good. So we could then enter below the low right over here or trade. Put a stop loss here, that's pretty good. We have a small stop loss here. And then we target 1-to-1 and 3-to-1 if that's going to be triggered. So take half the profit at 1-to-1, the other half at 3-to-1. Let's play this. Let's see if that works. Okay, we're close to our entry. Perfect entry triggered here. So what this is going to look like is a entry here. Stop loss right over here. Now I'm giving it a bit more room because we had a candlestick closer before. But you could very easily, if you want to place a stop loss here, at the high. That's fine. That works out fine too. Then we'll do a take profit at 1-to-1 and 3-to-1. Roughly around this point, that's fine. So let's see how this trade here plays out. Okay, we're getting in the direction of our trade, that's good. We have probably here reached a 1-to-1, so we close half the trade at this level, roughly, okay? Then we keep going, oh, pretty good, pretty good. Okay, here we have a big wick. That's why you want to keep your stop loss at the same place it was before. You don't want to move it necessarily. So you have the trade out in profit. And we pull back here a little bit. Okay, going back within our trade. See, now we didn't have a false breakout yet. We are still within the direction of our trade. And here we stepped out for the second half of our trade. Okay, so just keep in mind it's going to happen a lot. You're going to have some trades that don't win. The win rate for the strategy is around 50%, but you get a pretty good reward to risk in that case. Okay, so we'll have some losses, that's fine. In this case, we ended up with a break even. Take half at 1-to-1. The other half in a loss, that's fine, that happens. Okay, just keep in mind that this is not a perfect strategy. No strategy is ever perfect, but you are going to be having the odds in your favor if you trade something like this with the Asian session using the rules I shared here, okay? So it's good to show you some trades that don't work out also, not just the ones that work out, because you need to have clear and realistic expectations. That's very essential for good trading. So good example here. Let's have another example, see if we can make this work again and show you how that works out again. Okay, you'll see here, we are a little bit before the open of the Asian session here on the same pair, AUDGPY, my favorite pair to trade this again on the 500 chart. So see how our range here is quite clear. Well, we have a high over here, we have our touch here before. This is 3 a.m., so roughly 3 hours before the session starts. Then we have our low here, so that's 5 a.m. roughly. Then we have our high here, that's 5:20. So we have a pretty clear range here. That's pretty good. Okay, that's not trending at all. We are in a range. That's very nice because we have the same high here. Pretty good. Now let's wait for the opening of the session. Okay, session here is open. Now you'll see when the session opened, we already have a breakout. Our breakout is this candlestick here because this one closes beyond the high, beyond the wicks. We could say that. Or if you want to say this one, that's fair too. That's fine. I'm going to use this one here for my breakout here, but you could use this one. That's totally fine. So now we need to have a candlestick that doesn't have a new high, that doesn't have a higher high in this case. This one here has a higher high. We go beyond the high. We cannot enter here because remember we want to be able to avoid the false breakout. So let's wait for a candlestick that doesn't make a new high, and we'll put of course a stop loss right here, and we can take our profits as before, same thing. This candlestick here doesn't make a new high. Okay, that's good. So we can enter here beyond the high of this candlestick. That would be a nice trade. Stop loss here. And we want to risk it for 3-to-1. Now, like I said before, if you come back within the range, we're not going to trade this. We're going to stay away from this trade. And if it never triggers, then we'll just cancel it, of course. So let's see how this turns out. Okay, we come back within the range. So at this point, we would cancel, of course, our order because price is not going to break out. And we just here avoided a false breakout in this example. So we cancel this. We're not going to trade here. We're going to wait for a different breakout. Now, price could come back within the same breakout, same direction. But now what we'll do is we'll wait for, this is going to be our high price. This is going to be our range now. Because we went there before, price could easily go back there in reverse again. So we want to move our range to now this new level. Of course, price could go down and break out to the lower side. That's possible too. So let's see what happens here. Okay, we stay within the range, come back here. Very choppy. Oh, now we have a breakout that's lower. Okay, so again, we can use the same principle here. We broke out of our low point here. So we want to have a candlestick that doesn't make a new low. We would basically enter and put stop loss here if we have a breakout. So let's see. Let's play this again. Okay, making a new low here. We're not going to enter yet. This could be a false breakout. Let's keep going. Oh, this one here doesn't make a new low. Perfect. Now we will enter the market over here. Big stop loss. If you decide you don't want to enter this trade, that's fine too. Okay, you could avoid it. But let's see how this turns out. Okay, we're not going to enter yet. We want to place our order here below the low. So we never enter a market. We want to wait for a break of the low after a candlestick that doesn't make a new low, like this one over here. Okay, pretty good. Let's keep going. Okay, we are not making a new low. We're going back within the range. Not there yet, but let's see how that turns out. Okay, still in the range. Okay, that's fair. Okay, now we come back within the range. We're going to cancel again our order. Now look at how we just avoided two fake outs here. Like these are trades that wouldn't work out. We just avoided them. That's very good. Okay, we are increasing our win rate a lot here with these rules. We wait for the price to not make a new low, wait for that small pullback, then enter after the pullback. Okay, that's very good. Now, of course, you could still trade this, but now the range is going to be very big because now we look at putting this over here, making this low here. That's going to be much bigger. Okay, so if you have to break down here, that could happen, but in most cases that wouldn't happen yet. So in this particular example, I would stop trading for the day. Okay, we have two breakouts we avoided, two false breakouts we are out of, which we didn't lose any money, which is good, of course. It's part of our plan. So I'll just here stop trading because then London will start after. It's going to be a whole different game for this market. So here's an example of how we can not take losses, but avoid them with the rules of the strategy here for the Tokyo session. Pretty good. One more example here that's going to be more typical of what happens and how much you have to wait for the trade to happen. Okay, so let's have a look at how this works. So we are here. Let me just move on to the start of the session so we can see if we have a breakout or not. Because now we kind of have a range, but it's not very clear. Okay, so now we have a clear range. So what we have is we have our low here. This is more than 2 hours before. We have a wick over here, but that's like a long time ago. So I'm going to consider this one here to be the low of our range in this example. And then we have our high that's kind of over here. Maybe like a little bit lower, but that's fair. I'm just going to draw our line here. But keep in mind here to have our breakout, we need to have a break of this high here. Okay, so just keep that in mind. In this example here of this market. So again, that's a clear range. That's good. We can trade that. That's very, very clear. So let's keep moving forward. So here we are here within the range. We go back up. Okay. Now we kind of break the range here, but we're not yet at this high. So we're going to wait for price to get to this high, be the high of our range to enter the market. Okay, because we have a clear high here. That's pretty clear. That's not long before the opening of the market. That's 5 a.m. That's 1 hour before the opening of the market, before the opening of the Asian session here. So let's wait for this high to break. Okay, here we kind of break that. Okay, here, not very strong, but that will be all right. So let's wait for a candlestick here that doesn't make a new high. You see here, this one makes a high. This one makes a new high too. Okay, it's going beyond. So let's wait for the one that doesn't make a new high, and our stop loss will be either here or here. I'll maybe put it here. That's more aggressive, but that's fine. Okay, or we come back within the range. We didn't have a breakout yet. Here I would basically cancel the order because we didn't have a breakout. So that's a false breakout we just avoided. Well done, that's good, good job. Now our range will move to here for the next breakout, okay? So let's see what happens next. We're going back in the range. We're gonna go both sides, of course, at this moment. Let's play this out. Okay, back at the low. Oh, here we kind of have a breakout. Okay, but see, we go back within the range already. That's not actually a breakout, that's just a small wick beyond the range. We go back within the range here. No issues, cool. Let's play this out more. Okay, in the range again. Okay, now we are at the resistance again. That's cool, went back from there to there, that's good. Get back within the range. Again, we're wasting time here, but that's fine. Sometimes you're gonna have to wait. Like this is, keep in mind, this is gonna be 2 hours after the start of the session, so you wanna keep monitoring the market. because the breakout could happen later. It doesn't have to happen like on the first hour of the session. It doesn't have to happen the first minute too. Sometimes it will take time. Just keep that in mind. Here we have a breakout. Actually not a breakout because we have a high over here with the wick. This one here goes a bit beyond the range here, but not breaking the wick yet. We're gonna have a clear break of this wick to be able to call it a breakout. Okay, go back within the range. We will hear a lot of false breakout because this is very good. Now keep in mind this is going to be far in the session. Again, here we have a wick. We want to break this wick to enter the market to have our clear breakout. This is going to be our clear breakout here. See how this candlestick here just closes beyond the wick. That's very good. Now we need to wait for a candlestick that doesn't make a new high to enter the market here. So our stop loss will be here below the candlestick that broke out. Let's see how that turns out. Perfect. We have a new high. Let's wait for a candlestick that doesn't make a new high, like this one here. Didn't make a new high, still within the range. Didn't make a new high, is in the breakout, but not a new high yet. So that's good. What we'll do is we'll put our order here beyond the high. Stop loss will be here. That's very aggressive, but that will work out well if you want. But we need to be able to trigger this entry first without going back in the range to take this trade. Let's see how that turns out. We'll go back, okay. Okay, we stay here. Okay, we triggered here our trade. So we are now in the trade. We'll put our entry here. So we have our long right here. Stop loss will be over here. Let's just make it here with the wick because we have a wick that happened here after, just to be safer a little bit. That's cool. And then we have a 1-to-1 and a 3-to-1. Okay, this happened quite late in the session. So you want to keep monitoring the market. Maybe put some alerts for yourself where you can see where the market has a breakout. Okay, definitely if you're going to trade this strategy, put some alerts at the top of the range, the bottom of the range, so that you know when the price breaks this area. You don't have to look at the market when price is within the range. Yes, a waste of time, but when price breaks it, put some alerts on TradingView or whatever platform you use to know when it's breaking out and to know when to look at the market here. So 1-to-1, 3-to-1, pretty good here. We have a small stop loss that is very tiny. So let's just play this out, see how this works. Okay, price goes here. Okay, we're getting back to a small loss. All right, cool. Okay, and loss again. Okay, we're stopped out. So here's a trade where we got stopped out. Again here, because of the reward to risk, the win rate will be lower a little bit, but the winners will far pay for the losses in this example. Just keep that in mind. So that's a trade where we'll be stopped out, but that's fair. That's fine. It happens half the time, roughly. Now, I feel I need to show you an example when not to trade this strategy. Like we talk about the false breakout, but when not to trade because you don't have a range when the session starts. So here we are in a bit before the session. You see the session here starts right there. But notice how we didn't have a clear range. Sure, we have this high here where we touched 2 times in the past. But before that, we don't have like a really clear range. Like we have price here moving here. Okay, price is going like this, making new highs, making new lows, new highs, and so on, new highs again, here new highs again, pulling back. This is not a range. Sure, you could see you have a range here, but we're not going to trade that. That's way too tight. Okay, that's not something we want to trade or look at. So that would be a market where we don't want to trade. Okay, we could use other strategies, but this strategy here I'm teaching you about the breakout won't work here because that's not clear. You see how here price might just follow the trend again. That's usually what happens most of the time. Then it might reverse later. That's possible. Here we have a pretty good trend continuation, but not a breakout play here in this example. Okay, so just be aware of when this works and when this does not work. This works well for sideways market, but doesn't work well for trend. Here we have an example of a clear sideways market before we start the session. Okay, that works out really well. But then we have examples where price is trending before. That doesn't work well. Okay, you want to skip these trades. Again, here price is trending. Okay, we had a breakout. We kind of have a breakout way earlier. We're not going to trade that here. We cancel this trade. I'm not going to trade here. These are sessions you can take off. Here again, we can have a range, but not so much. Okay, that's very not clear here because we don't have any lows. We just have a price moving up. Then a reversal here. Not going to happen here. Here again, this is not a clear range. We want to skip that. Not going to trade here again. That is a very clear range here, but we have some false breakout. So we have a low that's here. We have our high that's roughly here. Within the same range again all the time. Price here goes at the same high again. We don't have a breakout. We come back within. Go back here at the same low as we had before here. No breakout. Here price starts to make a breakout, but doesn't make a new high. Actually, when price makes a new low here, actually when price fails to make a new high, that's good, or pull back, but it doesn't go beyond that. So false breakout, we avoided here again, and same thing here below. So you can still trade those, but be careful, we'll avoid here some false breakout with the rules we have, and that's why the rules are there. Okay, so be careful of these rules. Really follow them for real because they work well. Here we have another example of a very good range. That's perfect. Again, we would skip that one here because we go back within the range. We're not enter here. Only have some wicks. And then later on, we might have another breakout here at this place there. Where price fails to make a new high, we'll enter on this market here and put a stop loss here. And we have a lot more room here to go in this market. So pretty good. Now you want to let your trades run too. That's something very important. You don't want to be in the market and take a trade and cancel it later because it's not working out. You want to let your trade run here. So here in this example, we had our breakout, but we came back within the range here in this example. So we're not going to trade that there. But here, the second trade, look at how long this takes. So you can let your trades run. We enter here at this breakout. This breakout happened here from this range over here. Price came back within the range. This breakout here happened later. This is going to be 2 hours after the session starts. We have a breakout here of this candlestick right there. Then the next candlestick here is making a new high. This one here fails to make a new high, so we're going to enter beyond this candlestick right here. We'll put a stop loss here beyond the one that broke out. This one here. And then again, 1-to-1, 3-to-1. Same principle as before. Or 1-to-1, I'm just going to mark it here to be precise. Okay, 1-to-1 will be around something like this. And then our 3-to-1 would be even more far. But let's have a look at this trade. Okay, roughly 3-to-1 here. That's pretty good. So look at how the trade took a long time here to work up. Okay, so 1-to-1 is reached here. Let's say that's gonna be like your midnight Eastern time. So way too late to look at the charts, possibly. You might be asleep. That's fair. You leave your trade open for the night. That's okay. That's good. And then look at how the 3-to-1 took a long time here to be reached. Because that's like the next morning, 3 a.m., 4 a.m. the next morning. So keep that in mind. You want to let your trades run because they will work out. London session will be maybe in your favor. That works out well. Here we have a good example of a trade that took a long time to complete, but it was still definitely worth it. Okay, so keep that in mind. So hope that makes sense for you. Leave me your thoughts below in the comment section about this strategy, what you like about it, will you use it or not. If you're going to use this, make sure you backtest it. You need to know the stats for yourself. You need to be comfortable with it. You're learning something here really powerful, a good strategy that I've used for a long time, but you need to backtest it. You need to be clear on the stats behind it, why it works, how it works, when to use it, when to not use it. That's very important to test and practice for yourself. But I hope you got some value out of it. Leave me a like below also. Click the like button to be notified of future videos. And subscribe if it's not done yet. I post videos like this 3 times a week. 1 or 2 on Sundays, and then 2 videos like this in the week where I teach you stuff about trading, things you need to learn, some cool strategies, some cool tricks, cool mindset hacks. And I'll catch you back here in the next video pretty soon. Ciao.